How strong do you think this rebound is? How much conviction is the buy a dip mentality right now?
Yeah, it's interesting. I think it's every time we see a big sell-off in assets, and I mean big as in maybe 1 or 2%, you just see that very strong buying coming in, the liquidity returns. And we've seen that now every time there's been a dip. So I think it's a strong mentality. I think there's still a lot of expectation that we can look past this increase in variant Delta cases, virus cases globally. And there is opening up still taking place in the US and Europe in particular, less so in emerging markets. And that means that growth can get back on track eventually. And as long as, I guess the way to look at it, as long as hospitalization rates remain low, it ends up becoming a case where this pandemic becomes endemic and effectively opening up can continue. Although, as I said, it's not the case globally. But I do think there's just liquidity continues to buy on dips on that expectation.
And yeah, I'm still looking at the U.S. 10-year, and we've come back a little bit, but we're still hovering around 120 mark. Are we past the point of this is just about positioning now? This is just a technical type of move to something that's more about the growth concerns?
Yeah, I think there is an element of growth concern in the move in Treasuries. There's no doubt. We had a huge short covering rally. There had been a lot of position adjustment. There had been some potential buying from, say, China and other EMs where reserves have been going up. I mean, there's a number of reasons you can attribute, but the bottom line is the growth concerns are still there. They haven't disappeared. They are lingering. And the more bad news you do see about the virus escalating and increasing in numbers, you get these growth concerns coming through. The other factor is that markets have really absorbed the Fed's message that inflation is transitory and that there should not be a concern that the Fed will not be able to control the inflation risk going forward. And that message has sunk in pretty significantly. Now, of course, you can look at these above consensus inflation readings we've seen in a number of countries and think, is it the case? It's not so clear. But again, if you look at the move in Treasuries and the flattening of the curve, it does seem as if markets have absorbed that message for now.
That's one message that markets had been obsessing over. The new one is the ECB and what they might do tonight, likely to do, I should phrase it that way. What do you think is on deck on the ECB and how does this change things tomorrow?
Well, I think from the ECB perspective, we're not looking at a great deal in terms of actual policy changes. I mean, yes, we know that there is this shift to a more symmetric target around the 2% inflation target for the ECB, and that may mean some tweaks in terms of asset purchases, probably APP rather than the PEPP. But nonetheless, is it actually going to have any meaningful change in policy for markets? I think it's unlikely. Our view is that we're not going to see a great deal apart from some tweaks in today's meeting. And you know, it could still be a long way away before the ECB starts to taper down these asset purchases, as well as start moving towards any rate hike. So again, it's probably going to have a very limited impact. And obviously, we'll take a look for anything that seems more dovish could weigh on the euro today. But if anything, it looks like we're in a bit of a range for euro dollar.
Yeah, how does a central bank divergence, though, Mitul, affect dollar dynamics? We've talked about how this I guess, bid against most currencies now on the dollar is not really. You're not seeing that typical reaction function coming from the dollar right now. Do I focus more on the G10 space or U.S. against Asia?
Well, I think dollars benefited from just the fact the markets are very short, that the U.S. growth numbers have been still fairly strong, and that outperformance has continued. And, you know, there is, as you say, a differentiation between central bank policies. You know, the Fed is still likely, in our view, to announce tapering at the end of this year and begin tapering in January next year, and that's probably well ahead of a number of central banks. But you know, you look at central banks in G10 space, and we've seen hawkish readings across the board: RBNZ, Norges Bank, etc. You know, there has been this trend, and that's a big difference from Asia and emerging markets. The only central bank in Asia that seems to be anywhere near moving towards alleviating this accommodative policy is the Bank of Korea, and we could see them hiking as early as October this year. But generally, there is that big divergence. That's having an effect and helping the dollar to remain pretty firm against a lot of currencies, especially some emerging market currencies in Asia.
Mitul, leave us with this thought, your top trade, sir.
It's a good point. Well, we did put out a short dollar Korea trade, but overall, you know, the fact is, it looks like the dollar could see some further upside against some of the majors, and I think that's probably the way to look at it. But I think we're selective in Asia, so we're still short dollar Korea.